Did you know that you can pay off your mortgage in 5 to 7 years without changing your lifestyle? That is what I'm here to tell you about today. Welcome back to the Suzanne and Sarah YouTube channel. I'm Suzanne Moore, realtor in beautiful sunny Bend, Oregon, with Real Broker and the founder of the Central Oregon Investor Network, which brings together investors not only from Central Oregon, but from all over the country to learn from one another, share resources, and create more freedom in our lives through passive income from our real estate investments. This topic is one of the most watched meetup events that we had, one of the best attended meetup events we had, one of the most watched meetup replays that we had, and this was just life-changing information for so many people in our network because everyone wants to pay off their mortgage faster, but nobody wants to sacrifice, right? Like, we don't want to have to not eat good food or whatever it might be. Yeah, or like sacrifice something. And that's really what this is all about, is like, you do not have to change your lifestyle to be able to pay your mortgage off in 5 to 7 years. And that is really the magic of this. And it truly does feel like magic, because this is a strategy that you will never hear about from your lender, because it is called the First-Lien HELOC strategy. So it's where you get a HELOC for your property instead of getting a mortgage. And the reason your traditional lender will never tell you about this is they don't make very much money on these things, whereas they do make a lot more money on a mortgage. That's what all those closing costs are that you pay for when you go to the closing table, or that hopefully you can get your seller to pay for these days. But First-Lien HELOC is a strategy that also goes by the Australia method, so maybe you've heard it called that. There's a lot of different names for it, but it's a first position HELOC. So that means instead of getting a mortgage, you're getting a home equity line of credit on the property. And I know about this because I just applied for one. And it's really interesting because on owner-occupied properties, you can get up to 90% loan to value in a HELOC. And your closing costs are, like with some of the banks, like $850 plus whatever title and escrow charges you. You know, those are standard fees for title insurance and recording fees and all the things, right? But a typical closing cost for a mortgage is like many thousands of dollars, whereas this might be as low as $895 plus the title and escrow fees and recording fees. So way cheaper on that front. And then what it does is, it's really fascinating, and I am not the expert on this, but I'm going to just tell you the gist of this. It's basically like a two-way account. It's an open-ended account. So the way you have to set it up, you kind of have to change your entire financial structure in order for this to be maximized. And that means all of your income goes into the HELOC. And I know that sounds scary. Don't let that scare you. All of your bills get paid out of your HELOC. And what happens is, as long as you are cash flow positive in your monthly spending and saving, then your average daily balance and your interest gets calculated and reduced based on the amount of money that you're keeping in that HELOC account. So that's how you're able to pay it down faster. Also, it is straight line interest instead of amortized and front loaded like it is on a mortgage. So like, for those of you who've ever looked at your amortization schedule, which I'm sure there's not very many people that have, everything is front loaded on a mortgage. You're paying probably 80% of your monthly payment for years 1 through 5 on your mortgage is interest. And it's just a tiny bit of principal. With a it's straight line interest, so it's not front loaded. And your balance in the HELOC with all of your income is helping reduce the amount of interest that gets charged every single day. So that is what makes this truly magical, because you can leave that money in, but you can still pull it out and you can still access that 90% of equity after you've even paid down some of the principal. So it is this really fascinating concept, and I'm I'm not doing it total justice. So you definitely want to watch the replay with Michael Lush of Replace Your Mortgage. He was our guest speaker. He is the expert on this. There are definitely a lot of other people in the world that know about this and do this, but you can get a first lien HELOC on a new purchase, or you can refi out of a mortgage into one of these first lien HELOCs, and it replaces your traditional mortgage company. So it's first position, it's secured by your home, your income flows through the account, and it pays down the principal daily before it goes back out for your expenses, so that you're paying daily interest on a lower average balance than a traditional amortized loan. So the math really works in your favor as a consumer, because traditional mortgages, like I said, are front loaded with interest. A first lien HELOC recalculates your interest daily against your current balance. So every single dollar that sits in your account, even for a day between paychecks and bills, is reducing the amount that you owe. It is definitely not for everyone. Like, if you live paycheck to paycheck and you're not, you don't have like savings or cash flow or discipline, this is not a product you want to entertain. But if you do have cash flow and you do have discipline and you can see big numbers in your bank account and not go wild, then the strategy is really powerful. So this is really for people who have higher and more consistent income with a significant monthly surplus. So instead of, putting your savings into your savings account, you just leave the savings in your HELOC account so that it does this magical daily balance reduction. People who are disciplined enough to not treat this to not treat the available credit as free spending money, that's going to be really important, because your balance is going to go down really, really fast, and then you're going to have all this available equity that you can do stuff with. And if you're responsible, then you're doing things like private money lending, or investing it and kind of doing a little triage there, or just leaving it in there to continue doing its thing in the HELOC. So like I said, it's definitely not for people living paycheck to paycheck. It needs room and cash flow in order to function properly. So the things that you really want to watch out for, and that our speaker does a really good job of explaining, is there are variable interest rates with HELOCs. So this is something to be aware of, and they are tied to different margins. So they might be tied to prime, they might be tied to the T-bill, they're tied to different financial indicators, and then of course there's a margin on top of that. So your rate can change. The lender and product selection matters greatly. So I was recently looking for something for an investment property, so non-owner occupied, for a first position HELOC, and most places could only do 75% loan to value, but I found one company that would do 80% loan to value, which is huge, and their intro rate was 6.25% for the first 12 months. After that, then it is variable. But what our guest speaker really hit home for everybody is it's less about the interest rate and more about the amount of time that you are paying the interest. Time is a much more important factor than the actual rate of interest. And I know for those of us with our 2 and 3 and 4% mortgage rates, it's scary to let go of something like that. I totally get it. But it's also worth doing an analysis to see just how much cash flow you have to implement in a strategy like this, and see how much it might help you pay off your loan way faster and even cheaper than with your 2, 3, 4% mortgage rate that you have now. So like I said, it's also a cash flow strategy, not a credit building strategy. So you want to run your own numbers or have someone run them for you. So this is just one of the many amazing, complex, technical, super interesting topics that we talk about at our Central Oregon Investor Network meetups that are always online. You can join us from anywhere across the country, across the world, and we look at real numbers on the screen. We talk to people who have done this before. One of the speakers on that meetup told us he paid off his house, it was a rental, in less than a year. So using this strategy, obviously he probably had a very high amount of cash flow, and he decided to deploy it into the HELOC. But the cool thing is that he still has access to that HELOC, meaning the full, let's say it's $140,000 that he just paid off, is still available to him. It's not gone like it is in a mortgage where you can't access your equity without refinancing, right? So super cool. So much to learn. I can't wait to be an expert on this and give you all the juicy details of my experience. So until then, stay tuned and definitely catch the replay. You can check it out on our Central Oregon Investor Network replay from our meetups on our YouTube channel. And thank you so much for watching, and we'll be back at you with more great savings and investing tips and all that. And of course, please join us next week, Thursday, August 27th from noon to 1 p.m. Pacific time, where we will be hosting another fabulous guest speaker, a very own CPA local to Bend, and we'll be streaming this on Google Meet, as well as if you would like to join us in Bend in person, you can meet us at Casey's office and meet some of your fellow Central Oregon investors there. And we will be talking about advanced tax efficient strategies, which doesn't tell you much, but what we're looking at is ways to offset your tax liability by investing in specific products that give you a tax write-off and generate passive income at the same time. So super cool. Can't wait to see you there and learn about all these new strategies for offsetting our taxes and putting that would-be tax money to work for you. So we'll see you then. Thanks so much for joining. If you like this video, please like and subscribe to our YouTube channel, and we will be bringing you lots more great information soon. Thanks so much.